Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn Associates with your agriculture update, and we are now on Thursday, the 22nd of March, 2018, just after 1:40 p.m. Central Daylight Time. So we heard the president's tariff message. It was a message, by the way, a memo. It is not the tariff in place on China. It could be $50 to $60 billion. The retaliation that Wilbur Ross and others thought that could hit are the soybean pork market. We'll see if that's the case. Soybeans certainly didn't get shook up from it very much today. The stock market's more shook up than anything on it, as this market is backing off in all of the indices. Metals didn't get that typical, let's run to me for a safe haven area, and the Japanese yen did. It's the one that got the bid. When we look at the weekly area chart of closes, you're in a down thrust. I think you'd see that. You've come from 1060 down now it's a 1029 and 3/4 level. By the way, on this chart, you're still above key support of the 994.5 area. When you come to the daily area chart, you've been in a down thrust. You've had a bounce off the 1022.5 area, and you've been sort of sitting here now at 1029 and 3/4. As we take a look at the chart, you can almost see the downtrend line as to what it's doing right there. And when you put the swing line on, this tells me that unless you get over 1037, the market stays into what kind of formation? Bearish, because you're getting a pattern of lower highs, lower lows, a definitive bearish pattern. So I look at that and I keep with the bear scenarios that I've had. When I take a look at moving averages, the market is also under the 18-day average. And with today's setup, even though the 1049.25 number is that and it fell under this low, which was the 1050, it really has to even fall further to get an 18-day average under the last swing line low. So in a nutshell, if you took out 1037 and wanted to run to the upside, I look at it that you could run, but maybe 1049 would be the stopping point. In Bollinger Bands, this break with the announcement today did not have enough oomph to it to carry the market to the lower Bollinger Band and or the 100-day average of closes. So you've come down and all of a sudden you're sort of stalling a little bit. In the slow stochastic, this is what I'm now looking at hard. So let's look at how many days, and you can see both numbers are under 20. Today, yesterday, not the day before. Friday's going to be the key. If the market is down tomorrow and the slow stochastic's in bed, then I see a further down leg. If this market gets to the point where the red line turns up over 20, then you probably have exhausted yourself for the moment on the downside. Yes, you can get short covering. I'm not talking anything bullish just yet here either. If we take a look at today's low at 1022.25, it did not take out the previous low of 1021 3/4. You'd have to really just not take out these lows, go back up and close over 1049 to get a bullish flavor to the market. In the meal market, this is a bear market bounce. There could be more than that. You still kept the embedded reading on the close. On the opening tonight, it'll be interesting to see if it keeps it. If the market takes out today's lows and that embedded, the red line, turns back under 20, watch out. And it's under 20, but I mean start phasing itself down. If you take a look at the numbers, look at how many days you've had under the 20 level. So you have to really get this market where the red line's over the 20, and I think if you were to take out today's low, that wouldn't be the case. In the soybean oil market, how many days do we have to keep hitting the red line, the 18-day average of closes, for me to tell you there's no trend at work here? It's just back and forth like that, and that's all you're getting out of it. In the corn market, you are oversold, had a sizable break of 22 cents. Do you get a bounce? That's about all we could say. do we have a trend per se? Not really. You have a higher high and a lower low. It's what I'll call a vertical price break, and they're the hardest things to catch. When weather markets end, nobody rings a bell. They just end on you, so be a bit careful there. In the wheat market, still very bearish. Lower highs, lower lows. All you've done is given a bounce back up from the lower Bollinger Band to the 100-day average of closes. Momentum is oversold. Yes, both numbers here are under 20. The day before they were under 20, but not the day before. So I think soybeans and wheat tomorrow are critical days to see if momentum locks in bearish or not. In the sugar market, you're oversold in a market that now has higher lows, higher highs. That's negated by the fact that the market's under the 18-day average, so the bias is down. Let's call the market nothing. In the coffee market, lower highs, lower lows. Now, there's some divergence taking place. You have momentum trying to turn up as prices made the lower low. This market can be a surprise on the upside if you took out yesterday's highs. It could leave you with higher lows, higher highs over the 18-day average. And since momentum's trying to turn up, that would join in the party. So just a warning sign and things you watch for. What will the bears try to defend? Well, I don't know that they'll defend anything. Whenever you have numbers that are under 30, I don't find that the bears, when you're not embedded, are defending anything. This could be a market that if they did anything, maybe the 120.45 level, but if you get over 120.70s, you could be on your way to the upside. Cocoa market, you know, when you lost the embedded reading, normally price and that 18-day average make a run at each other. It hasn't. I've been pointing this out this week, that this market is acting much better than thought, and it's telling you a story that the 18-day average is going to have to climb each day to meet price. It's not the price falling to that. You have a pattern of a lower low, a higher high. You really don't have a trend at work. In the cotton, you're back into a downtrend, lower highs, lower lows, but oversold as can be. Market would be very fortunate to get to 80.94 in my opinion, but cotton could be one of those items that's looking at the potential of tariffs and wondering, does it get hit from that? In the cattle market, you've got the higher high, lower low scenario, cattle on feed report coming out. This would be a market to be careful of. You have the embedded reading. All you did today, and I pointed this out yesterday. Let's go to yesterday. You had 1, 2, 3 days in a row under the Bollinger Band, not this day. So that gave you a 2% chance today of prices staying under the Bollinger Band. The rule of thumb here's how Bollinger Bands work. 95% of the time the market will trade within them. 5% not. When you get consecutive moves under or above it, consecutive, I use each one of those as a rule of thumb, taking out one of those percentage points. And today it did me well. How do you use that? Well, if one is really bearish, they're saying, hey, what am I hanging around for? I got a 2% chance it's going to stay under that. It's one way to think of it. Did the same thing in the feeders. Got your bounce, still the embedded reading, but going into the report, who knows? And in the hog market, you got hit in here. And, of course, hogs, another item that China's talking about doing what? Another item they could easily put a ban on. They only import 6% of their hogs. They've really gone expansionary as can be within their country. They need feed grain. They don't need the hog imports. This could be an item, too, that's hit, and it felt some of that today. I want to remind you, our firm, what we do, and let me come back to this. We write on all these topics. We have our own staff of writers, and you're going to find that it's commodity news written for the commodity trader. It's not, it's a little part of it. At nighttime, we're telling you who the option traders are, what is going on. Daytime, we're doing it right through the market. If you have our trade platforms, you can actually hear our voices during the day of all these interesting people telling you who's doing what, where it's going on from, trade ideas. David Hightower, I'm sure a lot of you know who he is. He's on our systems as well. So how do you get access to it? Well, it's actually pretty simple. If you haven't tried it before, all you need to do is give my staff a call or go online and sign up for it. You'll see it's right on our website, and you can just go to www.iraepstein.com. You can click up here if you're watching me on YouTube, or underneath us on many websites it says click here for Ira's free information. I'm Ira Epstein. You have a great day, and I'll see you all tomorrow.